Okay, that's the global market action. How will these overnight cues impact our own markets? We have our research team joining in to tell you just that. This is our Power Prep segment where we'll tell you all about the trade setup, the stocks which are in focus, and the action from the F&O space as well. Hey guys, a very good morning to all of you. Rima, let me come across to you first up. What is the market setup looking like today?
Well, the whole of last week was fairly quiet for a market, range bound. And this morning, the cues that we've got from the global markets, US was a mixed picture. But Nasdaq sold off nearly 2.5% last week. So in comparison, the Indian indices, particularly the Indian IT index, has done pretty well. As you pointed out, the big cue this week will be the US Consumer Price Index. It will be published on Tuesday. Economists see US inflation slowing down to 6.2%, which could be the lowest reading since September of 2021. Escalating tensions between US and China could also keep Asian markets, particularly Hang Seng and Shanghai, under check because of the spy balloons which are getting shot down. Crude prices have inched up to $86 per barrel. The SGX Nifty is suggesting a mildly lower start. The India CPI inflation will be out at 5:30 p.m. On Friday post-market hours. We had the December IIP bang in line with street expectations at 4.3%. The mid-cap index showed some momentum last week. So even as the Nifty was flat, the mid-cap index was up more than 2%. On Friday, we had the DII selling 291 crore, but the FIs bought nearly 1,458 crore in the cash market, and this is the first buy figure since the 1st of February on budget day. After that, 1st Feb, we had a buy figure from the FIs, but thereafter it was all sell, and finally we saw selling pressure abate, and on Friday we had a buy figure. So that's going to be an important monitorable to track. Now, the earnings season is almost winding down, so the focus is going to be more on macros. As I said, the US CPI inflation is going to be key. We'll be watching out for how the FI flows pan out from here on. In terms of support, the Nifty support is seen at 17,651, which was the intraday low on the Nifty last week. 17,651. On the way up, it will be 17,950 to 18,000 is what technical analysts seem to suggest. Back to you.
Okay, all right. So those are some important levels to watch out for as far as the Nifty is concerned. Thank you, Rima, for that. But a lot of stocks that will continue to be in focus. Vivek has that list. Vivek?
Absolutely right. So many results that come in post-Friday. So what we're looking at, number one, is InfoEdge. Now, InfoEdge actually has delivered a slightly muted quarter, also impacted by the fact that there was a one-time loss this time around. So revenues up almost 40%, EBITDA up 60%. However, the management has indicated that IT hiring has slowed down quite significantly. Metropolis Healthcare, a muted quarter from the company this time around. Revenues down 2.5%, EBITDA down 6.5%, and profitability down almost 13% on a year-on-year basis. BHEL and optically a very strong quarter. However, brokerages had indicated that this could be multiple one-offs that helped and aided the company's earnings this time around. Profitability up almost 56% on a year-on-year basis. Nalco, year-on-year, there has been decline, but the company's results have been marginally above what the street was anticipating. Revenues down 12.5% on a year-on-year basis. EBITDA down 61%. Profitability down almost 70%. JK Lakshmi Cement, a good growth year-on-year, slightly has mixed analyst expectations. Revenues up almost 21.5%. EBITDA up 7% and profitability up almost 19% on a year-on-year basis. PB Fintech, total revenues up 66%. Adjusted EBITDA margins, continue to remain negative at -5%. However, the management has maintained its guidance of 1,000 crores profitability by FY27. Balkrishna Industry, a muted set from the tire maker this time around. Although the revenues were higher by 6.5% on a year-on-year basis, EBITDA is down almost 40% and profitability down 68%. A couple of other stocks that will remain in focus on the back of news flow. In Coforge, expect a large block deal. Barings PE is the likely exit as far as this particular block deal is concerned. And Adani Group stocks will continue to remain in focus. There have been additional pledges done by the company in multiple group companies, and also rating agency Moody's has cut the outlook on certain certain company bond as well as ratings that they have. So the outlook has been revised to negative from stable stance that they had earlier.
Okay, all right, Vivek, thank you so much for that list. Let me go across to Nigel now. He's joining in with all the cues from the F&O space. Hey, Nigel.
Hey, morning, Sonal. A couple of cues that came in Friday's trading session. One was the premium on the Nifty that came in lower, telling you there were some shorts that were getting piled up. And the second factor was on the Nifty Bank. It ended more or less flattish, but open interest was down by more than 7%, telling you that maybe there was a bit of a short covering bounce that did play out there. Let's focus on what the FIs did in the F&O market. Well, on index futures itself, they added some shorts. Close to around 10,000 short contracts is what they added. And appeared they were shorting the Nifty now, going by the data points that we did have. On the option side, there's no big direction that's coming out there. They bought more puts than calls. They bought them in the ratio of close to 2 puts for 1 call in case things go wrong. There's some kind of cushion on the put side. While on the writing side, well, they wrote an equivalent number of calls as well as puts. 1.2 lakh shares, or that's 1.2 lakh contracts. What did it do in the on the option side though? That's going to be quite important. And since the Nasdaq is under some pressure, the Nifty IT index as well could be under some pressure. So the Nifty bank becomes extremely important. The 41,500 put, well, out there, the total open interest was up by close to around 15 lakh shares. There was a sense there was writing out there. So for those writers, they're counting on the 41,200 odd level holding out. On the Nifty, well, the 17,800 put as well as call were fairly active in Friday's trading session. And there was some writing that we saw at both these two strikes. For those that are working for a bigger move on the Nifty, well, the 17,600 and the 18,000 call, they got bought into. Plugging in these numbers, though, going by particularly the writing action that we saw, the 20 and the 100 DMA, both on the Nifty as well as the Nifty Bank, both of them will be the resistance levels. However, in the near term, support for the Nifty buying around that 17,750 has worked for the last couple of sessions. So that becomes a crucial stop loss out there. While on the Nifty Bank, since the 41,500 put was seeing a fair bit of writing, 41,200 becomes important. For starters, the SGX Nifty was suggesting a mildly green start. Now, in fact, it's moved into the red. So let's see whether or not that buy on dips that played out the last couple of sessions works today as well. Back to you.
Okay, all right, guys. Thank you so much.